Welcome back. Let's have a look at what's happening to the US markets. They started off the week on the front foot. The S&P up 0.4%. The Dow has extended its gains up 0.2%, to the Nasdaq about 0.5% to the good. So I think those are new records. Across the Atlantic, the FTSE 100 doing okay today. I think it's maybe pulled back a little bit though. Up 0.25%. The CAC up 1.25%, and the DAX closing almost 1% ahead today. We were 0.5% to the good, just about 0.4%. Still with me in studio are Andrew Dittberner from Cannon Asset Managers and Gary Boyson from Rand Swiss. US markets carry on powering ahead, so hopefully tomorrow will be a good day for us. There is a question asking what you think of the Shoprite and Steinhoff deal. So no news for weeks. Bloomberg, end of last year, gave Steinhoff, I suppose said Steinhoff was one of the top 50 shares that you wanted to look out for. Could these shares fall to all-time lows in a year with a bull market? I'm not quite sure of that question though. Okay, but Gary, first, what do you think of the merits of a Shoprite Steinhoff merger?
I don't think it's going to fall to all-time lows, but I think there is a lot of uncertainty around the deal and how minority shareholders are going to be treated. So I think a lot of people have taken their foot off the pedal, and I think the excitement around what Steinhoff is potentially doing overseas with its acquisitions, with the synergies that I believe it's going to extract. I think the market has become a little bit nervous. Jaded maybe, around it. But again, if you look at the actual transaction, we don't have any real details about it, so it's very difficult to say whether it's going to be a good deal or a bad deal. We don't even know if the deal is going to come off or not. But looking at it, the combination of assets and the way that they're going to shift it into retail Africa, I think is going to be very positive for the group in the long term, because I think it'll just facilitate a better management of the assets as well. Obviously, the executives of the company want it to come off, but it's all going to depend on how minority shareholders are treated. So there's a lot of volatility in both stocks, but they both seem to be treading water and waiting for more information.
Yeah, Andrew, do you think it's a good deal, or do you think because the market seems to be very split?
Yeah, so I mean, the market didn't appear to like it when they announced it when late last year, but I think again there's a number of people or entities that are really going to benefit from this, and make no doubt Steinhoff will be amongst them. I think the Shoprite shareholders, I think, probably get a bit of a raw deal. They've got great assets there at the moment, and then they're going to essentially pay paper over to get assets which I would consider to be of a lower quality than what Shoprite's assets in Africa currently are. And I'm talking specifically here, the furniture, JD Group, etc. So I think if I was a Shoprite shareholder, I don't own either of the shares. If I was a Shoprite shareholder, I probably wouldn't be that enamored about the deal.
Can Shoprite shareholders not block this deal?
Well, look, there's a lot of uncertainty, whether this deal is even going to go through or not. I mean, it's in its infancy. But yeah, as I said, you've got Christo Visa, who clearly wants it to go through. Steinhoff on the other side. So, what's going to happen remains to be seen. But as a Shoprite shareholder, as I said, I would probably not favour it.
Okay. And talking about mergers, with the possible merger of AfriSam and PPC, how do we play it? Long PPC, short AfriSam? Well, you can't short AfriSam because it's not listed, unfortunately. So do you just go long of PPC?
Another deal that's sort of very sketchy on details at the moment, and a lot of uncertainty around it. So I believe if AfriSam and PPC try to merge it, they're going to have about 60% of the local cement market. They have tried this before and been blocked. The market has changed somewhat, so you've obviously got Sapako as an entrant now as well. You've also got more imports. So I think, they probably wouldn't be announcing the deal unless they thought that they were going to be able to get it through. And I suppose long PPC at this stage, I mean, they've just come to the market and raised capital as well. So, I mean, they've obviously, their share price has been destroyed in the last little while. But, if you can take 60% market share, I mean, that seems like an exciting investment proposition. But again, massive uncertainty around how it's going to play out. But yeah, I suppose if you want to take a speculative look at it, it might be something to go along at this stage.
I mean, I don't know if you were listening to there was a conference call and a press conference, so they talked about synergies and operational efficiencies. Well, I suppose you always do when you have a merger. But one of the things that's
monopoly pricing.
Yeah. What else? Daryl Castle was saying that it wouldn't have a different different gearing structure to what PPC has at the moment, and that, I suppose, was, having had to raise all this liquidity and try and kind of get their debt under control. Is that something that the market would be quite worried about if suddenly there was more debt on their books?
Yeah, there's not a lot of detail, I suppose, around this merger, if you want to call it that. To be straight, there's no such thing as a merger. Mergers don't exist. It's an acquisition, and someone's acquiring someone. And when they merge, this MBA talk of synergies, and that generally doesn't materialize. That's my cynical view on it.
Such a hard bit of cynic, Andrew.
But FSM, I think they've got quite a bit of debt. So if this entity is going to end up with the same sort of debt levels as what PPC have at the moment, they're going to probably have to raise capital somewhere. The biggest shareholder being the PRC. That's my understanding. But yeah, as I say, it's very early days. I wouldn't be rushing into this. I agree completely with what Gary says. From a competition commission, they wouldn't have come to the market and announced it if they don't think they're going to get it through. But I think it's going to be quite a tough one, even despite the fact that you've got, Dengati with Safaku, Mamba, etc. But yeah, we'll wait and see.
Okay, so don't rush into the PPC shares at the moment. Is Investec Australia Property Fund a good property stock to invest in? Do you have a plethora of options? Is this Gary?
Yeah, I haven't really looked at it. I couldn't comment on it. I'll leave it to Andrew.
I was going to give the exact same answer. Yeah, Investec Property Fund is not. I've never taken the time. We're not invested there. We haven't looked at it, so I couldn't give a specific comment around it. I could talk around property in general. But
is there a reason that you haven't? Is it because, I find one of the issues actually with all the listed property stocks is that there are so many. So to actually pour through almost 70 listed companies. I don't want to make my problems everyone else's, but it seems to be, you actually just get bewildered by the choice that's out there.
But it's not just that. I think you also need to look at the sector as a whole. If you don't have a mandate to sort of have property exposure in your portfolio, the property sector for me looks, it's been a fantastic performer, but it looks incredibly expensive at the moment in an interest rate environment that's increasing. Why did all these property companies at least come to market? They were trying to raise equity capital, reduce their gearing so that when the market collapsed, they could quickly raise debt finance and go out and buy cheap assets. So for me, that's not the best time to be going into property stocks. So for, again, it's we do hold a couple of property shares, but we stick to the big listed ones. We like things offshore as well, so we like the likes of CCO and NEPI at these levels still. But the whole sector, I think it has been a fantastic performer, but it's something that I think is very, very pricey at this stage.
Andrew, you have a general view on property stocks? Would you?
Yeah, so I'd agree. I think they're fairly pricey. So we don't hold any property shares in our pure equity mandates, and we only hold a few of the smaller ones, probably lesser known ones, the likes of Wakili, Imara, in our balanced mandates. And those tend to be the ones that we see a bit of value in. I agree that the sector as a whole looks fairly expensive, and hence we haven't really spent a hell of a lot of time looking into it.
Emira is coming out as results, I think, this week or next. They kind of really rattled the markets when they warned of, I think, negative reversions last year. Why is it a company that you guys like?
As you know, we're a value manager, and hence we tend to take a contrarian view. And we'll, if you look at the price to NAV or price to book, you get Imara at a substantial discount, which we really like, which you don't find in too many other places in the sector. And then the yield. If you get an 8.5 yield, a forward yield, that's very attractive. And hence we're happy to hold it.
Okay. Getting to stock picks this evening, gents. We were speaking about Investec Australia Property Fund, so can't really give a view there, but Gary, your stock pick is in Investec.
Yeah, Investec, the bank, the asset manager, the wealth and invest business, and the specialist bank, all put together. If we run sort of a sum of the parts at the moment, we think it's a little bit cheap. If you look at the graph, it has been recovering off those lows. It obviously got hit very hard on Brexit. What has happened though is the rand has actually appreciated against the pound, which is forced us to actually lift our estimate on the NAV of the company, which puts our price targets a little bit higher up. So I mean, we're probably looking for at least sort of 115 on it. We've also had a supportive equity market. If we see equity markets continuing to recover, we think that the wealth and invest and the asset management businesses are going to do very well. You also look at the specialist bank does have a few issues. It's not quite generating the kinds of ROE that you would hope that it would. Again, I don't know if that's more to do with the type of client that they're targeting versus the traditional the rest of the South African banks. But definitely we'd hope for more in the specialist bank. But that also gives you potentially an opportunity for a turnaround if they do manage to get that business right.
Okay. And Investec Limited or PLC doesn't matter which one you buy.
Yeah.
Okay. And Andrew, you're looking at Group 5. Okay, this is deep value territory we're hunting in. I mean, on the basis of Avengers trading update that came out today, that was horrible. And Group 5 also came out with a trading update, which didn't seem to be that great.
Yeah, they came up, when was it, last week sometime. It didn't look that great on face value. I think the thing with Group 5 is that people immediately associate it with the South African construction industry, and I'd probably argue that it's more so a property company rather than a construction company. And I say that because they've obviously got their local construction business, but then they've also got their European concessions business, which are long-term contracts. And essentially what that business is they maintain and manage toll roads in Europe, be it Poland, Eastern Europe. They've recently got a contract in Ireland. So they manage these things on very long-term contracts, and essentially they collect the toll money. They try and value these businesses, and they get a present value for what they believe they're worth today. And if you look at that value, it makes up a very large portion of the total market cap of Group 5. Hence, we believe you're getting the local construction business, which admittedly has been struggling. You get it at an exceptionally attractive valuation. And if they can get that right, there's definite value unlock. Preferably, what we would like to see is some corporate action. And we started to see that, I think it was late last year, earlier this year, with Aberdeen, where they sold half of their concessions business. So that's essentially the investment thesis around it.
Okay, we have to leave it there, James. Thanks very much for joining us this evening. Andrew Dittberner is from Cannon Asset Managers. Gary Boyson is from Rand Swiss. And we'll be back tomorrow at 7:30.